I'm Denise Ko Genovese, Associate Editor at Unquote, and I'm here in Cannes at the IPEM Private Equity Conference. And I'm here with Maggie Loo, Partner at Bridges Fund Management. Maggie, thanks so much for coming.
Pleasure. Thank you.
Yesterday you took part in the ESG Summit. Would you tell us a little bit about that?
Yes, it was a couple of hours of very focused time with a room full of GPs and LPs on the topic of ESG. And it was really interesting to hear about the perspective from the European standpoint. So we started with some interesting statistics around the size of the market from an ESG perspective. I think the figure quoted was about 200 billion euros that is dedicated to ESG, and actually more specifically impact investments. And interesting to hear that about 50% of the LPs have made some sort of impact investment as defined by them, with the proportion them represented by green bonds down to private assets to infrastructure as well. So that was really interesting to hear the size of the market, which I find is fairly consistent because I believe there are about $7 trillion of assets that are signatories to the PRI, about just under 50%, about 30 trillion of that are associated with some sort of ESG approach. And then if you dig further into that, currently those that are deploying an impact strategy, that's about $500 billion, but it's the segment that's growing the quickest, about 20% per annum.
And was there much differentiation between ESG and impact as policy versus a proactive strategy?
Yeah, I mean, I think even within ESG, it's definitely developed much further from the old days where it's simply about policy and simply about risk mitigation. I think more GPs are recognizing the potential to not only mitigate risks, but also to drive value from looking at ESG perspectives. So on one of the panels, we heard from GPs where that's actively part of their investment approach. And I think today it's fairly standard for LPs to expect GPs to have a policy around that and then know how to implement it. And so one of the key takeaways from the initial session was also about the fact that that's the expectation, but it's no longer enough on its own. I guess impact is really the next frontier, if you will, of ESG and how that's being developed. And very much specifically looking to drive both financial value, but also social or environmental impact from the businesses that you're investing in. And I guess specifically about what product or what service that they're delivering that will deliver the impact as well as financial returns.
And Bridges is very much at the forefront of leading the way in sort of impact strategy. Can you talk a bit about how LPs view impact strategies and whether that's changed through the years?
Yeah, I think if you just take Bridges' own example, we're about 20 years old. And so when we got started, we very much took this into approach, integrating impact into everything that we invest in. And in the early days, it was definitely something that the LPs weren't taking too much notice of. It was very much about, can you deliver the financial returns, and then the impact is a nice to have, but they weren't too focused on that, I would say. But over time, I would say, particularly in the last 5 to 6 years, we see the emergence of a new segment of LPs that are specifically looking for financial returns as well as impact, and then more over time, even more sophisticated to recognize that you can deliver potentially superior financial returns by looking for impact. Because in our perspective, we have found that they have helped us find better opportunities, be an early mover in identifying areas that might be underinvested into or not yet developed. And so we have a first mover advantage. And then also increasingly, we have found that it's a differentiation in the marketplace from a deal flow perspective, because what we offer is a much, I guess, well-rounded proposition to the entrepreneur. And so they were really looking for expertise, but also aligned capital that are, capital that's aligned to their values. And that's often a way that we've been able to unlock investment opportunities or become the investor partner of choice for them.
And would you say, lastly, that LPs are still skeptical, or the market's really changed incredibly now and actually everyone's piling into the strategy?
I think there's more of a discussion around it. I think it's not yet fully been translated into deployment as an allocation yet. I guess we have to, the two need to be in balance, right? So the part of the market where you really integrate impact into the investment approach is still small but growing very quickly, and that's often in response to the growth in the demand from the LP side. So the two kind of need to move along in sync. I would say that we have found that the fact that what we do is still very distinctive means that we are able to access the LPs through a different route. They're really wanting to understand how to make it all work. And so Bridges, for example, has been part of leading on an industry-wide initiative called the Impact Management Project to give more coherence to how all the players, including LPs, GPs, down to the entrepreneurs we back, how we think about impact in a coherent way, so that when the LPs realize actually we want to make our capital work harder, maybe in support of some of the UN Sustainable Development Goals, they can have a much more frictionless way to allocate the capital, because now all the players will be talking the same language. So I think at the moment that is still at that stage of the market where we're trying to get more adoption going around a kind of common language.
Great. Maggie Loo, Bridges Fund Management, thank you very much.
Thank you for having me.